Good day, everybody. This is Mike Zuzolo with your Friday, July 5th grain market update. Without beans or wheat supporting it, corn led the charge lower on Friday's trade, closing out this holiday week with December futures falling to levels not seen since December 2010 on reported light volume. The trade feels pretty comfortable pushing prices to those levels because of the 1.5% gain in the U.S. dollar, lackluster weekly export sales, and midday weather models came in a little bit cooler than previous runs for the majority of the Corn Belt, so the weather bulls couldn't do anything to come in and surprise the market on Friday as well. November beans also took out their July 2nd low of 12.35. This puts that new crop futures price down to late May levels. The U.S. dollar charging to 2+ year highs against Brazil's currency, and a growing presumption of a bigger soybean supply demand schedule coming from USDA late next week on their monthly report were probably the two major features keeping the November press down hard, even though July futures continued to rally. We saw the July Nove bean spread actually get up to $3.60 a bushel. That's really close to where we were back in 2004, almost at the exact same time period of early July. Now, one thing I will note is being in Atchison this week, Atchison, Kansas, the bean crop is starting to go backwards quite a bit. Corn is also seeing a lot of stress. We're almost exactly the opposite as Ohio is right now, with very hot, dry conditions and several missed rains here this week. Wheat on Friday fell in sympathy with the row crops. Losses were contained, though, and held in check by fresh export demand and new sales reported to China, which is a welcome thing to see. Busy week of demand for wheat in the Chinese business and with some other countries. That was a nice thing to see. That's it for now. Have a great weekend. For more information, go to globalanalytics.biz. Please remember there is substantial risk of loss in trading futures and options. The impact of cycles or current events on prices may be already reflected in the futures.